You have the Nikkei market, so that is down around 134 points.
Dr. Reddy is leading the race to go ahead and acquire Novartis AG's, a little over 70% stake.
Nifty is inching towards the resistance line of 22,130. We're at 22,080. So very, very close to previous highs.
You could see a big disconnect between price and value, which is the case currently, continuing for a long period of time.
6 to 6.5% is our deficit estimates for this year and next year.
Our general staffing business has a good shot at becoming globally the #1 company in that space.
The Reserve Bank of India extending the deadline for the bank to wind up its banking activities by 15 days.
Well, we do have fresh all-time highs coming in.
I think two companies, similar revenues, but totally different market journeys.
This has been a good day for the market. We hit that record high level and we've sustained at those highs.
Okay, well, it's new all-time highs once again, and that's the day so far and how we've done it. This is the last hour coming up here on Closing Bell. We're coming to you live from the CNBC-TV18 Moti Rosewal studios. I'm Prashant. With me, my colleague Surabhi and Mangalam makes a presence as well. Guys, hi, afternoon.
Well, I make a presence when it's a new high or something. I'd say that. But you know what? The new high that it is, this one has a tinge of disbelief as well, right? Because last week, there was so much chatter around the US not wanting to cut rates immediately as expected, hotter than expected inflation. And the global market's not supporting us the way it was in the previous up move. And now as we speak from Wednesday's low, the Nifty is up, 650 points. So there is a fair amount of disbelief, I believe.
I don't know if there's disbelief amongst those who are making those gains, because disbelief, I think definitely for us to an extent as commentators, but this has come against the backdrop of not very great global markets. Like there's not a global rally sweeping through screens and India just being lifted up or, swept along the way. Not at all. It's been convincing, it's been strong, and we're at the day's high with so many different sectors, different kind of stocks participating.
Yeah, absolutely. And I was in Chennai on Saturday, and I met a bunch of South Indian-based companies, promoters, and at least two of them asked me a question. I mean, of course, it just showed you how they're thinking. They're saying, market kitna girega?
Oh, wow.
How much, what is, they're just expecting it's a matter of time, it has to happen. It's just too unsustainable. But these are also nice South Indian promoters, conservative. They are
ask a question in Bombay. I think people do not take it too kindly.
I wish I went to Gujarat and Rajasthan over the weekend for me to be able to tell you.
The question would be opposite.
I would have told you the other side of it.
But anyway, I mean, that feeling is there that maybe it's done too much. It's okay. The market comes off a little bit. No panic. But there's nothing. I mean, the market keeps on going up, and that's what we have on our hands. So it's a new high. Just to kind of wrap up some of the top points. And we want today by 3:30. You want a convincing close above the previous high, 130. The reason that a level is important to some degree is essentially because the first time we got to that level was 15th of January. It's been a month since. There were 3 attempts. There were 2 other attempts from the 15th of January. And then in each of these instances, the market hit the 22,130 level and then kind of sold off. So maybe this is it. And the market kind of takes it, sort of keeps going. So that's why numbers on the board. Bank Nifty has got resistance at 46,824. That's the last final kind of level, which is the 61.8% retracement of the sharp and swift fall that we had, the last fall that we had. And above that, the Nifty Bank perhaps also will look at its own highs. Except real estate and IT as a bunch. All other sectors are in the green. Advanced decline is some 2:1. So can't complain. A pretty good looking screen overall. Surabhi.
Absolutely can't. I mean, in the morning at least, one could be sort of talking about Reliance not participating, etc. All that has changed because it's literally sort of everybody joining in the party. And if you talk about it, very diverse set of stocks. So barring life insurers and IT, as Prashant said, those are the 2 areas on the Nifty at least where you're seeing some weakness. Look at the move on Reliance right now, days high on that stock. Auto has been very strong right from the word go today. So Bajaj Auto, a couple of others like Maruti doing really well. Then you've got participation from the consumer space as well. There's Titan that's done well today, ITC, and so on and so forth. Basically, it's I don't know how to find any flaws or complaints because it's an overall good-looking screen. Yeah, maybe you can always quibble about HDFC Bank as usual. It's underperforming. But barring that, I think it's been looking good.
It's been looking good, but I just try to put a bit of caution on the table purely for a couple of reasons. The first thing is that, yes, we are at a record high. No complaints out there whatsoever. But it's on the back of lower volumes. Maharashtra is celebrating Chhatrapati Shivaji Maharaj's birthday, so we have bank holiday in Maharashtra. Wall Street indices are closed today on account of the president's holiday. So institutional volumes are slightly on the lower side. Nimesh, of course, will tell us a lot more about what the dealers are doing, etc. And secondly, usually when the market moves higher, we have volatility that comes down. Today, if you look at the split screen of both the Nifty as well as the India VIX, both of them have gone only one way up. And it's not that the VIX is at 11, 12 or something. VIX is at around 17 and it's held up with a gain of around 5.5%, with the Nifty moving to the record high levels itself. So those are a couple of factors we'll be watching out for. What today's move has done, as it's given a lot of these call writers at 22,000 some sleepless nights, so they are covering their positions. The question is, where do they go from here? Put writers believe that, okay, 21,950 to 22,000 is a firm support. So support has come, higher, but it's not that the ceiling has gone much beyond that as well. Why is that? Because the Nifty bank is still struggling to cross past that 50-day moving average. You did speak about HDFC, right? Nifty bank is doing, it's gaining in step with the Nifty itself, but it's still a good 100, 200 points away from the 50-day moving average of 46,813. So until those things happen, maybe the street will not feel as good about this up move. Maybe it is one for the record books, but we need more volumes. We need some more participation from the Nifty bank, and perhaps the mid-cap index, which too is about 1-2% away from its record high.
Well, for what it's worth, it's all the indices right now tracking a gain of 0.6%. So the screen is looking good. You can't deny it, though, of course, and need to take some of that caution on board as well that Mangalam alluded to. Let's quickly move on and bring in our first guest on the show. We have with us, for the trading strategies, Rahul Sharma, Director and Head Technical Research at JM Financial. Rahul, thanks for joining in. New records, new highs. It's just up and away. How would you trade this market?
Yeah, it's been 7 weeks of consolidation for the Nifty, and eventually we are seeing this breakout happen today. Now, the final confirmation would be a close above the 21,125 mark, but the way the broader market is positioned, there are good chances that the confirmation comes through today. And that now opens up gates for 22,500, hopefully by the February expiry itself. And that puts also the banking index, which has been the major pain point in this entire correction for a very strong reversal and a lot of catch up to be had both in Bank Nifty as well as Fin Nifty. So we are quite positive about the way the breakout has happened today. And at the same time, a confirmation should only increase the conviction in the direction.
All right. And individual stocks, what would you be looking at?
Yeah, so IT index is something that we are looking at. That index is breaking out. From that pack, Coforge is something that we like at these levels. The stock has performed well throughout the day today, but positionally we feel that 7,000, 7,200 is very much on the cards. So Coforge can be bought at these levels, have a stop loss at 6,600 on the downside, and we expect the IT stocks to do well from here. Second stock is L&T Housing Finance. L&T FH is something that also looks good. After a brief consolidation, the stock is sustaining above its moving averages and looking to create this breakout above the 180 mark. We feel that this stock can head all the way up to 195, 200 on the upside and can be bought with a positional perspective, keeping 170 as a stop loss.
Okay, all right. Got that, Rahul. We'll come back to you for more, but that's what's the indication as things stand right now. Now, Quest Corp is essentially in focus after the company announced a demerger into 3 different entities to improve focus on business verticals. Let's just quickly get the details out with Sonia. Sonia, over to you.
Well, thanks a lot for that. Quest Corp is the big stock in focus. Now, the company has announced a demerger into 3 entities to improve the focus on the business verticals. Now, this demerger will help create pure play verticals to help with the business positioning. Basically, it is in order to simplify the corporate structure of the company due to independent scaled platforms, and this will also entail an optimal capital allocation strategy. The demerger will take about 12 to 15 months' time. Now, this will involve 3 demerged entities: Quest Corp, Digitide Solutions and Blue Spring Enterprises. Quest Corp has 70% of the consolidated revenues, Digitide Solutions has 14%, and Blue Spring Enterprises is 18% of the consolidated revenues. Now, Quest Corp is into workforce management, Digitide Solutions is into InsurTech and HRO businesses, and Blue Spring Enterprises is into facility management and industrial services. Motilal Oswal put out a note this morning where they say that this demerger is beneficial both to companies as well as to investors. They have a neutral rating with a target price of 560 on the stock, and there is an investor meet on the 21st of February in order to provide more details to both investors as well as shareholders. So more details are awaited then. But for now, it seems like a win-win strategy both for the company as well as its shareholders. Back to you.
We expect our staffing business to grow between 17 and 18% over a period of time on a larger base. The other two businesses will grow in excess of 20% or less. In Blue Spring, we expect our business to grow about 4 times GDP growth rate. I wouldn't venture into guessing what the market would price our shares at. But I would want to say that we had suffered from a conglomerate discount in the past. We expect that to be removed. We would think that we have a 100 basis point improvement opportunity in Blue Spring, and we'll go up from 5 to maybe about 6% or so. Our Digitide business, we are in the high teens right now. So as we grow rapidly in that business, our priority is to ensure that we stay in the high teens there and not give ground to growth while we grow, and reduce margin. In workforce management, it is a more competitive business because India is a very price-sensitive market in the general staffing space. We expect to improve margins there by about, let's say, between 20 to 40 basis points. So that's sort of the narrative on margin improvement.
All right, that is the management of Trent telling you that some of their businesses, Digitude in particular, could be a $1 billion business from around $300 million that it is right now, and all of this while margins are improving for them as well. A big move is what we are seeing in these twin stocks. We were talking about that earlier. BF Utilities and BF Investments typically moves in tandem, typically moves ahead of any sort of news flow that may be likely from the Nandi Infra in Karnataka. It's been going on for many years. Any sort of periodic moves that we see in these BF group stocks, every once in a while there is a bull run in some of these mid and small cap names itself. But we do have Dipan Mehta with us. Good time to invite him on the show right now. Dipan, Quest Corp, one of the bigger gainers of today's trading session after the three-way demerger that the company has announced. What are your thoughts, whether you track the company? The whole BPO vertical, the staffing solutions vertical is looking attractive to a lot of people.
Yeah, good afternoon, Mangalam, and thank you for having me on your show. We have been tracking Quest Corp and have been invested in the company, but by and large, it has really underperformed and not lived up to its true potential. The basic business model is good, and formalization of the employment market certainly benefits companies like Quest Corp, but for some reason or the other, they've always disappointed when it came to delivering the numbers. And in the past, they had done so many acquisitions, and a lot of capital got misallocated on all those acquisitions, which took a long time to assimilate as well. And now the company is doing the exact opposite, where it's trying to split the businesses. So let's just wait and see how this actually plays out. And generally don't like companies which are, doing so many corporate actions like mergers, acquisitions, and splits, because that kind of diffuses the concentration of the management, which should be on the business. And so far, the business has not lived up to its true expectations.
Well, they think they're suffering from a conglomerate discount, Deepan, and they think that the demerger is the way to go. Anyway, that's the Quest story. Stay on. We have more questions for you. I want to discuss Balrampur Chini as well, because there's an interesting corporate development in that company too. Now, Balrampur Chini is going to be investing about 2,000 crores to get into a brand new line of business, and that is the manufacture of polylactic acid. This could be quite interesting because this is an input that goes into making what perhaps is biodegradable plastic. So all things green usually are well received by the market. Makshi is here with the details. Makshi, tell us more. Typically business diversification is not very well liked by the street, but for Balrampur it seems to be slightly different.
Well, absolutely, and that is because the opportunity for Balrampur Chini appears to be quite massive. Now, over the weekend, the company announced that they will be foraying into manufacturing of polylactic acid, which is PLA. This is definitely a new line of business, but it is a natural extension to their business, given that sugar is in turn a raw material for making PLA. Now, just to give you a brief background, in the union budget, a new scheme was introduced for bio manufacturing and bio foundry, and this new investment that the company is expected to do is in order to capitalize on this opportunity. Now they are expecting an investment of around 2,000 odd crores, which will be done in phases over a period of 2.5 years. Nearly 800 crores is expected to be funded from internal accruals, while the remaining 1,200 odd crores is expected to come through debt. They will be constructing a PLA factory with a capacity of nearly 75,000 tons per annum, and in fact this is expected to be the first industrial bioplastic plant in India. Not just that, they've also recently acquired a minority stake in Konkan Specialty Poly Products, and this has been done in order to bolster the market presence of PLA. They've also gone ahead and appointed Mr. Stefan Barot, who comes in with nearly 13 years of experience in the bioplastic industry. So a couple of developments out there for Balrampur Chini, and on the back of that, we're seeing a sharp uptick in the stock today.
Yes, it's a news that's been well taken by the market. Vamakshi, thank you very much for joining in. Deepan, so bioplastics, I mean, these things, these days, all things green businesses, sustainability, these are like buzzwords, right? And the market usually likes the sound of it. But what do you think of this big foray, 2,000 crores?
I hope they're not spending it all at one shot and gradually over the years, because that would really stretch the balance sheet. But even on a standalone basis, existing businesses of sugar and ethanol are doing well. And it's been a great value creator. Balrampur Chini, they have expanded their capacity significantly, and even more expansions are going on stream. And the best part about the sugar industry is now we are seeing consistency in earnings, because a large part of the offtake is going to the oil marketing companies in the form of ethanol. Of course, there are minor, government changes which do cause some aberrations, as we have seen in the past. But I think long-term trajectory for sugar and ethanol manufacturer like Balrampur Chini is very good. Valuations are attractive, return ratios are great, and I don't know if this particular project of theirs is really successful, then certainly it can take the company to a different zone altogether. But these are long-term projects, and one needs to see how they actually shape up and whether they turn profitable or not. But otherwise, also I think from a risk-return profile, and we do feel that an upcycle in sugar and ethanol is possible. From that point of view, I think Balrampur Chini has got some more strength from these levels.
What an interesting story of what do you call integration, diversification from for the entire sugar industry, right? Earlier they were just price takers on the sugar business. That after the big structural change was ethanol, and now people are getting into bio as well. So evolution is the name of the game.
Actually, Kenneth Andrade, who was now of course had a mutual fund as well. That's been a big bet for him for some years. That traditional sources of food and crop will be used more and more towards production of energy as well.
Biofuels.
Biofuels is going to be a big theme. And the government, of course, is also focused on
So what will we
schemes. Eat? That's again, his call is it will lead to agri-inflation. I mean, which essentially will be, of course, a long-term kind of journey. But, the demand for these crops is not going to be just for food, but for sort of converting it into a fuel, etc. as well. So
it's scary to think the way Kenneth thinks, right? Because it's the one gift that you have is of thinking a lot, but at a human level, you get scared to know that food will become expensive. A lot more people.
Well, to be fair, they've managed it really well on the sugar side. I mean, the government ensures that first priorities is to ensure adequate supply of sugar. We saw what happened with B molasses, C molasses, etc. And then only the surplus residue, which is not to be used for the main food, is used for
or maybe the non-agri products will be used for food consumption, which comes in from the pharmaceutical space. Maybe your energy comes in from some genetically modified things.
I think we need to take a break.
I think Mangalam was talking about Ozempic.
Ozempic is one of them, yes. Semaglutide.
But that's to curb hunger.
That's to curb hunger. So maybe have a semaglutide and then use all the agri products for fuel.
All right. Well, Deepan is still with us. Maybe one more question, Deepan. Sterling Wilson, right? Solar Wilson, which is, of course, partly owned by Reliance. There's a note I think Novama came out with a note a few weeks ago. That was in January, I think. This morning, another broker, Monarch, has come out with a note. And I was looking at some estimates. So they made a loss in F5, I think 22, 23, 24 also is projected to be a loss. There was a large amount of debt, but they did a QIB and the debt's now gone away. So on a FY26 basis, is actually now trading at, these are of course estimates, some 13, 14 times earnings. I don't know if you've looked at this stock or you own it. Anything you can sort of add?
You're right, Prashant. I think it's a classic turnaround story. And of course, the street likes all these renewable energy companies which are engaged in projects. A lot of investment is going into renewable energy in India, globally as well. And Sterling and Wilson also has a lot of overseas projects. But part of the positives have been captured in the upside, and buying something so deep into the future based on the present order book position really doesn't appeal to me. And no doubt it's a great stock to own if you're already invested in it. But for these levels to make a fresh investment, I'm not sure, because stock has run up significantly also. And now valuations also are pretty much steady considering the track record, which has been quite poor.
Okay, all right. We'll take a quick commercial break here. Deepan, stay with us. Market, by the way, has I think cooled off a little bit. So we are up 100 points. And from the high that we made at about 230 was basically the high. I think there's a drop off which has happened. So 22,185 was the high, and we're about 40-45 points off that level.
Just wanted to also point out as we take that break that the market is not liking the small miss that Coal India is speaking of in terms of production. They're saying they'll miss their production target for the year only by 10 million tons, not a huge miss, but the stock has dropped off dramatically. Given the rise, given the run-up, Coal India had very, very good numbers as well in the quarter gone by, and the stock was bid up even after that. In fact, I mean, it's pretty severe and drastic, that drop coming in. Up 111% in the last 1 year, up about 15-16% in this month itself. And then comes this news, no scope of error. Deepan, just before we hit that break, quick 30-second take on Coal India. I mean, do you think market is getting a little too harsh in its reaction? It's a 10 million ton production miss. Or do you think that it's justified given the run-up in the stock?
I think it's just a minor miss. One shouldn't be too perturbed about it. Still remains a value play. And there's increased recognition that coal is going to be around for a long, long time as an energy source. So I think sentiment is gradually improving in the stock. I wouldn't sell on this news.
Okay. All right, Deepan. Thank you very much. We'll leave it on that note then for today. Good to have you on this Monday afternoon. Take that break and come back with more. We also will have with us Dinshaw Irani, CEO at Helios Mutual Fund, for a perspective on the market.
Okay, welcome back. You got the market, which is up about 100 plus points. 22,150 is where we are at right now. Look at the drop-off which has happened from the day's high, as I was talking about. And, you know, a close, a decent, nice, solid close above the earlier high would be nice to kind of go home with. Dinshaw Irani is with us. He's CEO at Helios Mutual Fund. Dinshaw, great to have you with us here on the program. Thanks very much for your time. What should we start with? Markets at a new high, some of the individual bets. Okay, we'll leave the market for a little later. But let's start with some of the individual bets that you have. And in many of these, like HDFC Bank or Paytm, things are evolving. So let's just start with HDFC Bank, Dinshaw. What have you done, if anything, over the last month or so since the results came through? I'm sure you've got an analyst at the analyst meet, the analyst day, which is going on, and we'll, I guess, get more details later today and tomorrow. But what have you done with that position?
So Prashant, I wasn't. I knew that you were going to ask me HDFC Bank and Paytm both. So let me start with HDFC Bank first. Okay, so basically, look at the facts, look at the figures. Okay, if you were to look at the market cap of HDFC Bank prior to the merger, it was around $112 billion odd, right? Post merger with HDFC, the market cap today is $130 billion. So it's an incremental $18 billion. Now look at what HDFC Bank got with the merger. If you take away the public holdings, the 50% odd holding that HDFC had in, say, Life and AMC and Credilio, 90% odd in Credilio, these three together would be around $14 billion of market cap, right? So what you're left with is a residual $4 billion of additional market cap, which the market is giving to not only the listed entities, the stake of, say, HDFC in Bandhan and Yes Bank and so on and so forth, but also that $74 billion of book of the outstanding book of HDFC Bank, the housing loan book. How can that be justified? It's a matter of time before, some semblance will come through. The only mistake that we can think of that HDFC Bank was that probably it didn't go so aggressively in garnering deposits in the quarter ended December. But I think that's behind us now, and obviously they took a prudent call that they don't want to get into a rate war at that point in time, because anyway liquidity is in a crunch period right now and remains so also. So our feel is that probably another quarter of maybe waiting it out, but we're fairly convinced that going forward, things are going to only look up, and maybe that is the stock which is going to lead the rally in the financial space.
You know, a lot of people are saying that deposits are going to get expensive. Low-cost deposits itself are drying out. And at the same time, a lot of the consumers of capital are moving to other sources of capital as well. So fundamentally speaking, would it make sense to look at some other people who may have more deposits right now, better loan deposit ratios to perhaps fuel growth till the time HDFC Bank garners its deposits and gets ready for takeoff?
So Mangal, so basically the franchise is the bet you want to take on, right? With this kind of franchise, there's no way he can, HDFC Bank can be lagging in the race as such. And anyway, as you rightly mentioned, that if deposits prices are going to move up, if they're going to get repriced, I'm sure it'll be far lower for a franchise like HDFC Bank than for any other player who's in the market. Yeah. So obviously, if again at the cost of repeating, if others are gonna, if HDFC Bank loses its shirt, others are gonna run around without clothes, right? That's a statement which I made last time also, which was attributed to Puri, and I sincerely believe in that, right? So I think we would rather stick to this. In fact, in a rising deposit rate scenario, you want to be with the good franchises. You want to be with ones who have controlled their asset quality and stuff like that. Yeah. So that's why we would rather stick to the best in the field and go around looking for some other bets.
Dinshaw, hi. Well, I have to ask you the second question then, right now that we're done discussing HDFC Bank. Paytm, so the January fact sheet said that you had about, I think, 2% of the holding. Now, I don't know, we're in February and then everything changed, the world changed. So I'm not sure if you're still holding on or you pared down. So what's been the thought process, given that this has been, pretty much a life-altering event for this company?
So Shruti, basically we didn't pare it down, the market pared it down for us. from probably 2% we went down to 0.8 or so, purely by not doing anything. I mean, basically because the first, I think 40-45% was you couldn't even move a muscle, right? Everything was in circuit. So, and finally we decided that the call we took was that, look, I mean, this is getting overdone. Unless the call that is being taken is that all the businesses will go down to zero, then probably that price was justified, otherwise not. And I think we stand vindicated. I mean, as in, you know what has happened, right? They allowed, apart from the wallets and the banking license, the payment bank license, I think everything else is in status quo. In fact, that's what the company also is coming out and advising about it. So I think we are more or less done with the correction. And from here on, probably one has to look at, so if you were to look at the price prior to this whole event happening, which was say 31st of December, I think the price was around 650 odd bucks. Obviously, that will not be ever touched again. I mean, in a while, that is. Business has to catch up before they touch that levels. But some semblance will come back, probably 30% lower than those levels, probably. I don't know. I mean, I'm just taking a guess because that's the kind of loss that one has seen in his business per se. So maybe that is what you may look at some point in time. Otherwise, we are planning to hold on to it, right? Not add any more, but hold on to it.
Do you expect a decent kind of sort of repair on the name? I mean, not back to those levels, but with some of this settling down, do you think there's a move here? Yeah. So
Prashant, I feel so. I mean, otherwise, Axis Bank would have touched it, right? I mean, I'm sure they have seen something in that, and it's a fairly nationalized, I mean, large national bank as national spread is national. So it's obvious that they've seen something in this, and there's a lot of potential. I mean, you look at the platform that Paytm has developed, right? There's no parallel to that. I mean, we can look at the others who are in the field and always compare the valuations with them also. It's probably not even half. It's like 1/4 of the others who are there in this field and who've done the same. So I believe, yes, there's a fair bit of repair in store for Paytm. Obviously not the levels that were there earlier, because one big chunk of the business is out of the book right now. So our feel was that 25% of the profits were lost in this whole bargain as such, and that may be the level that one can see the correction from those earlier levels that one can see in this price, I suppose.
Okay, now that we've spoken about two of the difficult stocks in your portfolio, let's talk about one that's working really well, and that's MCX. Our colleague Sudarshan is joining in because we've been looking at a lot of the brokerage commentary on MCX, which has been sounding very good. And as of December, the MCX holding in the Helios FlexiCap fund was around 1.6%, thereabouts. MCX, remember, had bad results. I mean, there was a loss and the stock sold off quite a bit. But since then, it started recovering. So Sudarshan is here to tell us what's working for multi-commodity exchange. Sudarshan.
That's correct. So MCX is higher today and is up almost 10% in last 3 days. But stock is still down almost 8% from the record level it had hit earlier this month. And all the down move after record high had come on two reasons. First, company had reported earnings for Q3 and that was lower than estimates. Second, company had faced technical glitches at the platform on February 13, which had led to a 4-hour delay in the start of the trade. But now we have a positive brokerage report from the UBS. And UBS in its note says it has a buy call on the stock and target is raised to 4,300 from rupees 3,000 per share, which is nearly 16% upside from the current levels. It has majorly given two reasons for it. First, it expects strong growth to flow into profitability in the current quarter. Second, new product launches will be a key driver for near to medium term growth. UBS expects earnings CAGR of 20% over FY24-26, and on the valuations front, it says MCX is currently trading at 40 times and it is justified due to strong growth outlook.
Okay, all right, got that. Thanks very much. Just a quick detour back to Coal India for a second. That's a really sharp drop in the premium that Coal India always enjoys in those e-auctions. Remember, they sell coal in two different ways. One is the fuel supply agreement, the fixed agreements that they have, and then what they sell in the open market via these e-auctions. And typically, prices in the spot e-auction market is always higher. And from 117%, where the premium was in Q3, which was responsible for a lot of the great numbers that Coal India put out in Q3, it's collapsed to 45%. That's sharp. It's really sharp. And therefore, the volatility on the Coal India stock. But okay, anyway, Coal India in the limelight this afternoon. But then, very quickly to go back to not just MCX, but beyond lenders, you've got a lot of other market infrastructure institutions. I think you have a wealth manager on the BFSI side of the portfolio. Just wrap up the BFSI thought process for us.
So basically, Shruvi, I mean, if you look at what happens when per capitas move up the way they are expected to in India, it's obvious that the financials are going to do well. I mean, banking is one obviously big segment. The other one is obviously the ones which are market facing, and we call them gatekeepers to the wealth as such. So that's obvious that those are the guys who are also going to go up, because ultimately you have to have vibrant stock markets for the economy to do well, right? And that's what these wealth managers that we hold are expected to do. I mean, as in guide the capital into the right spaces to increase the wealth of not only their investors but also for the country as such. So that's the call we've taken there. And plus, we have other participants also, which are market-related participants that we got apart from the wealth managers. So that's how we're playing the whole segment, I suppose.
All right, let's give you a softball then here, Dinshaw. Zomato, that's been doing extremely well for you. But on the other hand, you also have some exposure to other QSR players, Westlife, for instance. What are your thoughts here? I mean, will you continue to play this space via the aggregator who sells everything? Or will you look at some specialists like Westlife, Jubilant Foodworks, and maybe Devyani and Sapphire?
So Mangal, when you're developing a portfolio, you want to set up a relay team which is going to run a marathon. But and obviously you need to have these set of leaders, one in place. So maybe Westlife hasn't done well for a while now, but it's probably Zomato which has taken the baton from Westlife and started running the lead. So that's the whole logic here. And ultimately, when you're developing a portfolio, you need to have these flavors in the market. So that's why we'll never have a FOMO kind of a feeling ever, because we already have. We know that there are a lot of stocks which do well in the market, and that's why you need to be in the right spaces, and ultimately they will take care of them. And Zomato has a long way to go. So does Westlife, though. I mean, as in the QSR space. But I think that's how we want to play this.
Are you not a fan of pizzas?
No, actually, one, too much calories. The base has a lot of calories. And secondly, too much competition, I suppose. So better stay away.
Speak about a cheesy burger having less calories than pizza. I don't think so, but
they do. Believe me.
No, a lot more area, right, on the pizza. I mean,
yeah, but pizza is horizontal. Pizza burger is vertical.
Surface area. Dinshaw, anything new you've sort of come upon? Anything you're working on? Any theme you like? What are you looking at?
So basically, Prashant, we're looking at some stocks in the renewable space. So let's see how that comes about. I mean, it's still early days, but as and when that comes up, probably we'll be more comfortable talking about it now.
Okay. I mean, renewables. All right, that's interesting. But you've not bitten yet, right? You're not gone in yet. Still working on it.
No. Yeah.
Got it. Then shall we leave it there? Thank you very much for joining us. Great speaking with you, and appreciate your time here, as always, on CNBC-TV18. Well, that's Dinshaw Irani, Helios. Well, the markets come off now, so just about 70 points. So from the point that we started, closing at 230, this is a substantial kind of fall that we have on our hands, and that's why I was saying right in the morning, right at 2:30 when we started, that a decent, nice close above the 22,130, the earlier high, would be important. Otherwise, immediately people will look at this and say, well, this is the market's respecting that resistance line, which is held in place for the last month and a half or so. So we'll see. And by the way, US is out of action today. It's a holiday, as we pointed out earlier as well. So you kind of come back in a vacuum tomorrow as well. Of course, there'll be the rest of Asia for company. Coal India is down 4.5% now. We'll take a quick commercial break here. We'll come back with, what Rahul Sharma wants you to buy or sell today for a reverse trade tomorrow. And of course, some specific stocks as well. Stay with us.
Welcome back. Here with us on Closing Bell. Let's get back to Rahul now to figure out some more trades, some calls for the last few minutes. Rahul, so, there's been a little bit of a, profit taking, if I can call it, at the top. What's the advice now?
Yeah, I think the broader trend continues to remain strong. We're looking at the Nifty 500 index, which has already given this breakout. So sooner than later, I think Nifty will take out that level. Now, looking at the stocks per setups, which look good for tomorrow. So one is Cummins India, which looks very good for a BTST trade. The stock has formed a bullish pull and flag pattern and broken out as well. We feel 2700, 2730 is very much possible in tomorrow's session and can be bought with the stop loss placed at 2620. Another stock which is from the IT space, which is like sort of not exactly IT, but IT and light services, is Dixon. This stock has given a breakout today on the back of very strong volumes, and the entire consolidation since December has been taken out. Our sense is this can easily head towards 6850, 6900 over the next few trading sessions and can be bought at these prices with a small stop loss of 2% at today's closing levels.
Okay, Rahul, coming back to you for more, but we'll sort of turn our attention to another interesting sort of data point, right? This is literally a tale of two cities and cities wide apart. We're talking about two companies in the same space, but which have seen two very different trajectories going on. So clothing companies in India working in the same space, but completely different journeys. Mangalam is here standing by to take it away. Mangalam.
Well, I was talking about Trent and ABFRL, both of them in similar lines of business, both of them backed by strong promoters, one by the Tatas, the other by Aditya Birla. And if you look at the trailing 12 months revenue, both of them are similar, but the market cap journeys are extremely different. Just a few years ago, both of them had similar market caps itself. For the last 2 years, Trent is up nearly 300%. Aditya Birla Fashion, on the other hand, is down by 15%. Last 5 years, Trent has been a 10-bagger. Aditya Birla Fashion has languished itself. And that's the difference that we see in the market cap too. When they started out, a few years ago, similar, but Trent is now 1,40,000 crore, while Aditya Birla Fashion is 1/7 of that. What explains this difference? Let's look at their numbers to understand that. Well, on the top line, last 12 months, both of them have similar revenues. Trent a little lesser than Aditya Birla Fashion. Aditya Birla Fashion has 10% margins, Trent has 15%, but it's the bottom line where Aditya Birla Fashion has a near 800 crore loss, whereas Trent has an 800 crore profit. What explains this divergence in the bottom line? Let's understand the differences between the companies by understanding their business models itself. Trent is basically a company that takes stores and turns those stores into brands, whereas Aditya Birla Fashion and Retail is a company that takes brands and then expands those brands into stores. So we have Westside, Zudio, Star Bazaar, Zara, and on the other hand, for Aditya Birla Fashion, not only do we have Peter England, Pantaloons, the Madura Pantaloons pack, but the recent demerge, brands which were acquired, designers like Sabyasachi, Masaba, even athleisure brands like Reebok itself. And in doing so, if you just take a look at the last 3 years growth trajectory, for Trent, the growth has been 33% on the top line, 47% on the bottom line. For Aditya Birla Fashion and Retail, it's been languishing between 12 to 17% itself. And the way Trent has grown is it's expanded their Zudio stores. When it started, it was just an experiment, and now Zudio stores are at 460 versus Westside at 227. Whereas Aditya Birla Fashion grew not only through their new models like ethnic wear and athleisure, they also acquired designer brands Reebok and more recently TCNS clothing. And that strategy has actually had a bearing on its balance sheet. So if you just take a look at the debt of Aditya Birla Fashion, it's nearly 10 times that of Trent. And even the trade payables, put both of them together, comes to close to 10,000 crores in terms of liabilities for Aditya Birla Fashion. And that exactly is one of the concerns. As we stand here, 1/7 the market cap, what are the growth triggers for Aditya Birla Fashion? Improvement in consumer sentiment, scaling of the emerging business. They were supposed to get some money coming in from GIC, which was committed to them 18 months ago, close to around 1,400 crores via warrant conversion. And of course, deleveraging their balance sheet would be extremely crucial because that is what will impact their profitability positively. For Trent, continued expansion of Zudio, and they are looking at, seeding new platforms like Star, Samo, and Utsa itself in the ethnic wear space. While the market cap movement has been divergent, so have the valuations. Trent available at 90 times, Aditya Birla Fashion at 33 times, nearly 1/3 the valuation. So let's talk about the risks that we have. At these valuations, for Trent, no room for growth disappointment whatsoever. For Aditya Birla Fashion, any value, dilutive acquisition or any further pressure on their balance sheet could be worse.
All right, Mangalam, that's very, very interesting and a very helpful kind of comparison between a big winner and what has been, a really underwhelming performance from the other one, which is ABFRL. Thanks very much. We'll take a quick commercial break here. More on markets on the other side. Stay with us. Markets up about 90 points off the highs, 22,130 exactly at the previous highs. Okay, welcome back. The market's up, 85 points. 22,126 is where we are at. Coal India, if we can pull that up, it's down about 4.5%. It's a sharp cut coming through after, two pieces of information that we got. There was a miss on the volumes, but more importantly, it seems that e-auction prices, which is highly the more profitable segment, this more profitable route through which Coal India sells what it produces, their prices have come off very sharply. Let's bring in Nigel. Nigel is our roving reporter for the day. He's actually flying to Delhi for an interview, but he joins us from the airport. Nigel, tell us more. I mean, actually the fall in e-auction prices seems to be very sharp. For analysts, would this come as a surprise, or because I'm assuming they would track this on a week-on-week basis, right? Pretty regularly. Go on.
Yes. So let me just make sense of this, Prashant. There were two statements that came out from the Coal India chairperson. The one factor that he said was the Coal India production will be 10 million tons lower than what they earlier estimated. The earlier estimate on Coal India was 780 million tons, which will lose 770. But that's not a miss, because most analysts were in this vicinity of around 760 to 770 million tons. The next statement that he made, that's the one that's spooking investors. Why is that? Because e-auction prices, as a premium in comparison to FSA, if you look at it in quarter two, the e-auction premium to FSA was at around 84%. In the past quarter, that number went to 117%. So there is a big uptick in terms of premium in comparison to FSA sales. And now what they're saying is, on an average, it's come down to 45 to 50%. So that is a negative surprise, because from 117%, it's come down sharply lower. Now, the reason that e-auction prices is very important is because the cost of production, whether it's e-auction or it's FSA sales, is going to be almost the same. So bulk of the profitability of Coal India comes in from the e-auction sales, because the cost of production is the same. The selling price goes 45% higher. So that's the reason why the street is a little bit nervous. What we need to track now is how do e-auction volumes shape up. For the past quarter, it was around 8 to 10% roughly of the total volume mix. If they can get that number up, higher e-auction volumes will help to offset some part of this decline in the e-auction prices as a premium in comparison to FSA. So just want to put that out to our viewers. The reason that the street is nervous about Coal India is because the e-auction premium as a percentage of the FSA sales, that's come down to 45 to 50% in the first 2 months of the fourth quarter. And that's the reason why the street is a little bit nervous. Guys, if anything else, I could clarify.
Okay, got that, Nigel. So I guess we have to see if there's going to be any recovery, any move up in that premium or not, because it's a sharp drop, as you're saying, from the third quarter. Got it. Thank you very much. Just running into market close now. Before we do that, quick question to Sudeep Bandyopadhyay, who's with us. Sudeep, hi, good afternoon. I got a little delayed because of all this extra news coming in. Any thoughts on Coal India and this fresh piece of news?
I think this is a bit of a disappointing news, and I don't think we were prepared for that. We were all positive on Coal India. The sudden decline in e-auction premium from 117% to 45-50%, I think is a bit of worrying thing, because this will pull down the margin. Now, the course of action in front of Coal India is straightforward. If they can increase the volume offtake in the auction piece, it's a little tricky. It's got a lot of other moving parts to it, but that can offset, I think, the sharp drop in e-auction premium in the overall profitability mix. But having said that, I think e-auction prices also keeps moving. So we'll have to wait and watch how they pan out over the entire Q4. I think to an extent it will also depend on the demand for coal and how that pans out over the next summer months. So yes, Q4 may be a bit tricky, but Q1 onwards, I think it should again come back to what they are usually getting. Let's see how things move out. But fundamentally, I think we still will remain our positive view on Coal India, in spite of this setback.
Okay, all right, Sudeep, thank you very much. Well, with that, we quickly have to start looking at the close as well. So the market has not been able to end at the highest point of the day, but we do have an 80-point gain to track, and it's probably not a bad-looking screen. But remember, at the highest point, all of these key indices, mid-cap, Nifty, bank index, all of them were up between 0.5% to 0.6%. So from that high, there has been a bit of a cool-off. But nonetheless, let's talk about the moves and shakers on the large-cap screen first. So Grasim is in pole position. Actually, very rare that we see Grasim as the top Nifty mover. But there it is, number one on the charts. Then you have Bajaj Finserv and Bajaj Auto, two stocks from the diverse Bajaj stables that have done well today. In banking, there's been a mixed trend. So ICICI Bank, for instance, doing really well. But as usual, HDFC Bank struggling. It's ending slightly negative. And IndusInd Bank also is down about 0.5%. So Kotak, by the way, also down about 0.25%. So barring ICICI, not much headway for a lot of other private sector banking names. Then you have some of the pharma guys that have done well today. Sun Pharma up and about. And Cipla, last I checked, was still managing a little bit of gain. Yeah, Cipla is still up about 2%. So then Reliance, of course. Reliance helping the bulls' cause, as do a couple of the FMCG names like you have ITC. You also have Titan from the consumer pack that did well. Tata Consumer was up and about as well. So those were some of the stocks on the gaining side of the Nifty.
Well, we had a lot of mid caps that moved in step with the large caps in terms of the index move, but a lot more stocks gaining than the number of stocks advancing. So that was firmly in favor of the bulls. Among the top gainers today, we had Rain Industries up around 9%, Dixon Tech, perhaps more smartphone business coming their way. Those were the reports as they indicated, up 7%. We saw a decent move on Delta Corp as well from the lows. And names like Oil India and all these energy stocks continue to do well. On the obverse side, we had HDFC AMC down closer to 4%. Z continues to decline, so down about 3% today as well. And some profit taking in a couple of these PSU banks like Union Bank and Canara Bank. But a bigger move was reserved for the small and mid non-FNO stocks. We had big names like, what are the big moves in names like Arvind Smart Spaces, we had JBM Auto, Force Motors, Inox Wind, all of them up in high single to perhaps low double digit stuff.
Well, absolutely, but a lot of losers as well. It was actually a pretty vibrant screen with enough in the red as well. Sula, for example, ended about 8% lower. There was, of course, we were just discussing Coal India. HDFC AMC sold off about 4.5%. Prestige was down 3.5%. Inox India was down 4%. Home First sold off 6%. Motilal Oswal down 4%. RateGain down 4%. Genus Power down 4%. So it's it's not one way like it was looking in the morning. So on my screen, some 15 on the NSE, 1,500 stocks were higher and 1,000 stocks were lower. So two-way price action by the end of it, and the Nifty actually ending just under the previous all-time high, which is about 22,126 point something. So just under that is where the close is. So some 60-point cool-off is what we saw in the last hour on the Nifty. It's a wrap up this edition of Closing Bell from all of us here. Thank you for joining us. But stay with us because we'll pick up on all the action on markets forward in just a bit.